Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So although in the daily chart we could see the performance not really very strong, but the recent statement of the Jerome Powell should have far-going consequences for the United States economy and performance of the United States dollar and for the European Union in general as well. It's just because we could talk and argue about how difficult situation stands inside of the United States and about the problems and so on, but in reality, actually, Fed has really significant reserves in a way of the United States Treasury deposit on the Fed account, on primary dealers of commercial banks, repo accounts with the Fed, and that totally equal approximately $2.5 trillion. And this reserve, with the burning approximately for 100 billion per month, as the history shows from the May, it led the Fed to feel comfortable with any policy that they intend to do. So rising interest rates, even moving back to the 4.5%, as some more hawkish representatives of the Fed committee suggest. And also it should be more or less enough to buy back all United States debt that Treasury intends to issue, starting in September with the big new issues they intend to come on the market, and also provide some liquidity even to the stock market. So, and these reserves, by our calculations, it should be approximately, with all even additional expenses, the $200 billion per month, it should be in general enough to keep the overall system on the surface. So it just puts the United States dollar in just incomparable place to the euro, because European Union is a dependent authority. It depends from the United States. A European Central Bank totally despair in its own measures with the fighting and inflation, and even recent minutes of the European Central Bank meeting suggest that they do not even intend to increase the pace of the rate change. And from that standpoint, it is, well, makes no sense to compare the policy of the central bank, the economic condition in the European Union to the United States, because in all spheres, the European Union currently looks really weak. And from that standpoint, as I said, we could argue about the break-even point of the United States economy and how long Fed could endure the current policy trying to make the image of prosperity, of the improving, fighting inflation, and so on. But it has no actual relation to euro currency. And euro currency definitely will be in a weaker place. And from that standpoint, we do not see any reasons to change our long-term view. The 90 below the parity we will see. And I will be surprised if it will be only 90. I will not really exclude the chance that later we will get to 80 and so on. Why? You could read in the fundamental report that we have put today. We have dedicated some part to discussion of European Union and its currency zone. Why it is dependent on the United States and what it could happen, just because it is a part of the Bretton Woods dollar system, and currently this system is changing. And that's why the part of the system, which is a Eurozone, is also will be broken. So, but from the technical point of view, we do not see any reasons to change our forecast and think that this tendency will continue. At least until the November election result might be the turning point. It's just because if Democrats will lose, and I suppose that they will lose if they will not falsificate the result of the elections, they could release the Kraken, economic Kraken. I mean, the problems in there, and second on Republicans. It's just Donald Trump trying to get out of it. So that might happen, but it's a bit different story. If even this will happen, hardly this will improve the position of the European Union and the euro currency. So anyway, from what side you will take a look at all the process that we see, I do not see any strength side in Europe right now, and I think that current trend not even should last until 90, even below the parity, but I am really worried that it even could accelerate further. In the short term trading, guys, actually market performs according to our expectation. Here you, by the way, could see the example of what I'm talking about on Friday. So when I said think twice before trading through the Wyoming meeting. Although we correctly set the direction, market makers and playing some tricks and just shaking the boat, providing really big volatility and sharp swings on intraday charts. That makes very difficult to make the trading. Our major resistance level was held, so no breakouts, market turns down, but it was really a tough game on Friday to trade on intraday charts. On the daily chart, we have the flag consolidation, which is potentially bearish, but more important is that not in the shape of the pattern. It's also important, but more important is that where it stands. Take a look, that flag is forming right around the lows. So market doesn't show the fast bounce up, but it stands in tight range around the lows. This is bearish sign, and it suggests further downward continuation. Next target, as we said already, is 97, 97.50 here. It's accompanied with the daily oversold. Trend is turned bearish as well. Market here has formed some kind of the shooting star or something of that sort. On the 4 time frame chart, you could see that our major resistance also survived. So we said, if you remember, with this Gartley's triple to sell, we said better to place stop above the confluence that we have on the hourly chart. Here is just single level, but in hourly chart it's confluence. And on Friday, the market has formed this clear bearish reversal bar. That's here you could compare whether it makes sense to trade to these big events or not. Personally, for me, I prefer do not trade such events as a Wyoming meeting, non-farm payrolls release, and support. And currently we have a much easier situation to deal with. We have bearish reversal bar, downward continuation, and all that we need to do is just trying to catch some pullback on most rising swing down. That's all. It makes the situation very simple. On hourly chart, so we could consider two levels, 110 approximately, and 140. More probable that pullback will be only to the minor level. It's just because major retracement already is done. This should be acceleration of this downward action. That's why when it has started, there should not be too deep retracements. Well, it is possible 140, but I would better focus on first one. So 107, maybe 50%, 125, somewhere in this area. Maybe some kind of head and shoulder shape might be formed here, as you can see, but I'm not sure this definitely will happen. And then theoretically we should keep going low. Next target on the intraday charts, XOP is 98, 15, somewhere in this area. We also already have discussed it. So from technical point of view, here we do not see really big surprises. Let's see what performance will be on Monday.